I'm Bob Behan, Head of Global Distribution at Calamos, and I'm here with David Kalis, a senior member of our investment team and a member of our investment committee. David focuses on U.S. equities and has over 2 decades investing in that space. David, with all the volatility going on in the market today, how does that impact the U.S. economy?
Sure, Bob. Over the past few weeks, we've seen a lot of volatility in the market. Most of that has been derived from what's going on in China, which has really put a lot of pressure on global growth. And that has put a lot of pressure, obviously, on U.S. equities, but along with that, European equities and Chinese equities.
So, David, with all the volatility in the market, growth stocks have still had a fairly strong year. What is your interpretation of that?
Growth stocks have outperformed value stocks by about 8% over the last 6 months or so. And that's really a function of the scarcity of growth out there. So when you see both in the U.S. and internationally, economies start to slow, interest rates move around a lot, currencies spike, the market tends to really look for growth, and really that scarcity tends to be bid up in the market. And that's exactly what's happened. That's not only happening in the U.S., but across the globe. So growth stocks are on people's radar because they can grow organically through an economic slowdown, and they have a lot more visibility. And we continue to think that's going to be the case over the next 6 months or so.
So how are you positioned to take advantage of the future opportunities that you see?
We do think that growth stocks will continue to outperform over the next year or so, based on that scarcity of value that I talked about earlier. We are overweight in technology. We are underweight in healthcare. We are overweight in consumer. And I can go through a couple of those sectors real quick for you. Just with the consumer, we're seeing obviously good employment growth in the U.S. We're seeing lower gas and oil prices, which helps the consumer quite significantly, especially on the low end.
And how about technology?
Technology continues to be an important part of our portfolio. We see tremendous opportunities in social media and mobile computing.
David, you can't turn on the news today without hearing chatter about what the Fed is going to do regarding interest rates. Can you give us your view on that and how that might affect U.S. growth stocks?
We do think rates are going to rise over the next year or so, but very modestly. My experience has been in a low rate environment with a lot of liquidity, growth stocks should do well and outperform value stocks.
Thank you, David. For more information on Calamos, please visit our website at www.calamos.com.